Hi everyone, welcome to Thursday, and of course every Thursday we do a share and review. Today we're going to take a look at a property share being property for industry, and we'll see how that's been performing. Now just remember, June is KiwiSaver month. I mentioned it on Monday that if you have KiwiSaver and if you haven't been contributing to it regularly, then jump in, see what your contributions have been for the year, and make sure that you top it up to $1,043. This way you will get the government's contribution of $260. Might not sound a lot, but over time you'll be surprised at how that adds up. And after all, that is a 25% return on your money. Of course, it doesn't qualify if you are in the 39% tax bracket. If you are unsure about your KiwiSaver and you want to have it reviewed, just making sure you're in the right fund, that sort of thing, then follow the link that I have put in the show notes. This will take you through to Quarter Wealth. I've teamed up with them recently, proud to offer their KiwiSaver. They're a New Zealand-based company and they are more than happy to do a review on your existing KiwiSaver for you. And let's take a look at property for industry. Before I jump across and share my screen though, just remember that this is for educational purposes only, not intended to be personalised financial advice. If you're looking for that, go and have a chat to your own financial advisor. I've got property for industry up here on the screen, and I've got it on the 5-year chart. So it brings these bars or candles up to weekly candles. You can see that we've had 2 negative weeks in a row. That, for me, if I was evaluating this particular share, that would be 100% knockout straight away. I don't want to see 2 negative weeks in a row or 2 red candles in a row. So if I was looking at the daily chart, I wouldn't want to see that either. Now, it could simply be because it has gone ex-dividend back on the 18th of May. I've spoken of this before. Quite often when a share goes ex-dividend, you will see the share price fall. And the reason for that is quite often people are comfortable holding the share until the date that it goes ex-dividend. So then they will actually get the dividend, sell it the following day that it goes ex-dividend. And there are a lot of people that do that. And that's why you can actually see that the market usually responds quite negatively when that happens. However, for me, like I just said, because there's those 2 red candles in a row, it's not something I would want to be touching. Let's go and pop it onto all and just see how it looks since property for industry has been going. And you can see that it reached a peak back in August 2021, where it closed just over $3. We're now trading at $2.38. So it is a wee way off its highs, but that's sort of nothing to get too concerned about at the moment. We'll just have a look at the 1-year chart and just see what these daily candles are telling us as well. So we're getting some really good little rallies and then naturally some falls when it goes ex-dividend. However, you can sort of see that on Friday last week, even though we've got that doji sign there was a lot of volume, and you can see that the volume, if I zoom in, that volume candle there was above the 13-day moving average, which is that red line. So we'll just wait and see. Let's go and pop our moving averages on just to see what they are telling us. So again, I will use the 30 exponential. So the market has closed above that 30-day moving average. That's a good sign. Let's also put on our 15 period. And again, the market on a weekly basis is trading above both the 30 and 15 period moving average. That is really good and encouraging to see. Let's jump back to the 5-year chart and see what that's telling us. So the market has only just closed above that 30-week moving average. That 15-week has only just slipped through. Depending what happens this week coming forward, it could in fact even go back the other way. So if we have another negative week this week, then you will see that 15-week moving average cross down to the downside. Now, if you follow me regularly, that is a warning sign when you see the moving averages cross to the downside, especially if the shares start trading below that. And you can see that the moving averages, for example, close to the downside at around the beginning of September last year, and then we did have a little bit more downside until they started to swing up, and they've only just swung to the positive side now. And you can see that there was a lot more further to fall. In fact, we hit a low of $2.20, and that was on the week ending March this year, before it started to turn up. And naturally, the moving averages are a little bit of a laggard, but they certainly do help with indicating where the share potentially is trading. So that is something that we need to keep an eye on, is make sure that these moving averages cross to the upside. Let's take these moving averages off. You can see here with property for industry, it does pay regular dividends as well. So we've had one for May. We've also had one in February. So it does look like it's paying quarterly dividends, or every now and again there might be a special dividend as well. Good if you're looking for dividends. However, I certainly don't invest into companies purely for their dividends, because I've done reviews on other shares where the dividends, sure, they're good. However, the share price has fallen so much that the dividends wouldn't have made up for the loss in the capital value of that share. So to me, dividends are a byproduct. I'm really wanting a share to be in a good, strong uptrend. Right, let's compare it against the New Zealand market and just see how it's looking. You can see the blue line up here. This is the New Zealand share market over the last 5 years. Property for industry is below it. So over the last 5 years, property for industry is down just over 19% compared to the New Zealand Stock Exchange, which is up about 3.7%. Another indicator that I want to see is I want the individual share trading above the main board, because, hey, it's listed on the main board. If the main board is traveling up, then we want to see that the share that we're looking at is being a main contributor to that, which at this stage it isn't. It's probably been a little bit of a detractor, really, especially through the early period here, which was 2021. You can see it's had that huge fall. I'll stop sharing. I really hope that's helped, and I hope what I'm showing you regularly each week on the share markets is adding value to your trading journey. Just remember, if there is anything that you want to know, or if there's anything that I can help you with your share trading education, even if you'd like me to take a look at a particular share, certainly can be on any other exchange other than the New Zealand market. The principles are still the same. I'm happy to help, happy to do that for you. So just reach out. So until next week, do take care.